Hey, good evening, everyone. I'd like to thank everybody for giving me their time and coming by to listen to our webinar. I just wanted to acquaint you a little bit about myself. Um, I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson University in Philadelphia. I've been involved in the financial markets for over 20 years. And I began trading the futures and forex markets about 10 years ago. And my area of specialization is the optimization of software systems via mathematical modeling. And the company that we have is Rightline Trading. It's at www.rightlinetrading.com. Now, I think that what I wanted to do is try to really bring about a shift in your thinking about trading futures, forex, and stocks. Because if we think about the day trading business, we have to realize that something about it is very wrong. I mean, something is broken. If you can think of another industry or another endeavor in which 95% of its participants fail, I mean, I cannot think of another one. Yet for some reason, 90 to 95% of all day traders fail. And there has to be a reason for that. And I think I'm going to be able to show you that reason, because there's a common thread that runs through all the software programs out there in which the same mistake is made over and over and over again. And personally, I mean, I believe that's what leads to such an enormously high failure rate, and why if you associate yourself with any of these types of programs, you're ultimately going to wind up losing your account. Now, again, it's very unique because this is the only industry where a vendor will ask you to buy software or a trading technique that you can't see until after you buy it. I mean, you wouldn't do that with a car, you wouldn't do that with an apartment, you wouldn't do that with anything. But here, that's done all the time. I mean, you can't see it until after you purchase it. In addition, the entries come with no back-tested strategies. There's no mathematically quantified predictive value for taking an entry, i.e., there's no sensitivity, there's no specificity, and there's no positive predictive value associated with the trading entry. And essentially, what we've done here at Rightline Trading is we've taken what we believe to be all the independent variables associated with taking a successful trade and put them into a mathematical equation. And we've optimized each of these independent variables independently to come up with a trading platform that clearly defines risk. And if you look at all the independent variables I'm ultimately going to show you and adhere to our trading strategy, you'll see that what you take are strategies with a defined sensitivity and specificity, and you can come up with what is the probability that this trade is going to be successful. In addition, I mean, a lot of these programs have no track record. And I'm going to show you that a lot of the systems are just plain broken because the people that create them don't understand the formulas that are used to create the indicator lines. Now let's just take a look at the stochastic and Renko bars, for example. Now the stochastic is a common indicator. It's a momentum indicator that shows the location of the close relative the close relative to the high, or a close relative to the low. So in order for the stochastic oscillator, whether it be relative strength, whether it be RSI, whether it be the CCI, to work, you need to have four numbers to plug into the equation. You need to have the open, the high, the close, and the low of each bar, whether it be a tick, a time, a candle, a range. It doesn't make any difference. But those four parameters are required in order for an oscillator to trace out an accurate line. But what I see are a number of programs that use an oscillator and they use Renko bars. Now, this is a normal range chart. It's an 8-range chart. You can see that you have a high, a low, an open, and a close. And this is tracing out an accurate oscillator line. Now, I hope you can see my pointer. But what happens if you go to standard Renko bricks is you no longer have those four parameters. And I see extremely expensive software programs that trade standard Renko bars using an oscillator to try to increase the precision of your trading. And all the stochastic is doing in this particular case is just mimicking price and provides you with no additional information with which to take an accurate entry. So it even goes to it even goes that deep, and that is, these self-professed gurus don't even understand the numbers that need to go into a stochastic equation in order for it to crank out an accurate line. And then they're asking you to buy this for a very, very high price, and it's not going to provide you with any accurate information in terms of taking an entry that is going to go on to be successful. Now let's take a little bit of an addition. Let's take an additional look at the oscillator. Now there are two schools of thought on how to trade an oscillator. Again, I hope you can see my my pointer. The first school of thought is that when the oscillator goes into overbought territory, it shows you that the bulls are firmly in control. And what happens is every time price breaks an additional high pivot, these traders continue to buy. So they buy an overbought market with the understanding that bulls firmly have the upper hand right here. Then there's the group of traders that look for stochastic divergence. What they do is when RSI makes a lower high and price makes a higher high, they look for price to fall. But you can see in this particular case, they get run over. So the problem is, what role does the stochastic play for you in trying to increase the precision of your trades, i.e., to use the information to increase the percentage of your wins, or to increase precision, or to increase the positive predictive value of your trade, to increase sensitivity or increase specificity. Only take trades that are going to be successful. And the ultimate answer is that the stochastic doesn't play a role at all. Because who's right here? Are these traders right in continuing to buy an overbought market as you continue to break overbought pivots? Or are these traders right? Do you wait for divergence and trade a reversal? Well, we didn't know. So what we did was we looked at the stochastic and we did a year of forward testing. We put it into NinjaTrader and we ran it on market replay. And we looked at whether or not stochastic makes a difference in predicting whether or not a trade is going to be successful or not. And the fact of the matter is, stochastic plays absolutely no role in giving you a better trade. So it conceptually, it's nice. Mathematically, it's nice. But when you have two sets of traders, each trading in an opposite manner, then you forward test it for a year, you find out that it really doesn't have any predictive value whatsoever, and we've eliminated the stochastic line from our trading platform. Now, I call it the Fibonacci myth. And people have been trading Fibonacci for, I don't know, 25 or 30 or 40 years. Fibonacci was, I think he was a 16th or 17th century mathematician, and he found this curiosity. And what it was that certain things in nature can be described via the use of these transformations that he developed. You know, 3, 5, 8, 13, 21, 30, 36, I think, 55 are Fibonacci numbers. Now, he was alive and created Fibonacci numbers and his Fibonacci transformations long before the stock market was around. And then somebody had the bright idea of applying Fibonacci numbers to try to describe the movement of price on a trading chart. And now remember, this is the use of Fibonacci in trying to predict the movement of price is really a very, very old concept. And I don't know anyone who trades Fibonacci who trades successfully. So what we did was we did the same thing that we did with the oscillator. We took Fibonacci, we forward tested it for a year, and what we found was that sometimes Fibonacci levels break, sometimes they hold. Whether they break or hold cannot be predicted. And if it's a hit and miss kind of situation, then it doesn't add to the predictive value of your trading entry. So there's absolutely no value in treating Fibonacci levels for Fibonacci extensions or Fibonacci retracements. And remember that Fibonacci numbers and Fibonacci transformations describe the movement of nothing in the universe. I mean, they're very, very powerful equations. You know, Planck's constant and Heisenberg uncertainty principle, quantum mechanics. These describe the movement of subatomic particles, others very, very large bodies, but they do have a utility in describing something in nature. Fibonacci transformations describe nothing. They're really just a mathematical curiosity. And why they were ever shifted over to try to describe the movement of price in a financial instrument, I have no clue. But we have absolutely documented via a couple of years of forward testing that sometimes fib levels hold and sometimes they break. And when you get that kind of a result, the predictive value of using fibs are zero. And they're very, very expensive programs that trade fib levels, and they just are not going to help you. So what is the predictive value of any indicator that assimilates data from your trading chart only? And what is the predictive value of any indicator that works sometimes, but not other times? And essentially, the predictive value of these indicators is zero. And this is the problem. All of these programs mix and match indicators that assimilate price and sometimes volume from your trading chart only. They work sometimes, they don't work others. They have no ability to look forward into the future and no ability to help you determine where price is going to go. And yet, this is what everybody does. And this is why 95% of day traders fail. They're chasing this one more indicator is what I need to make my trading successful. They're trading the next software program I buy is the one that's going to make me a profitable day trader. But their underlying mechanisms are all the same. And whether they call the indicator the market accelerator, the market decelerator, there are only 5 parameters on a trading chart that can be inserted into any mathematical formula. And that is the high, low, open, and close of a candle or price and volume. Those are the only 5 parameters. And no matter how you want to spin them, I saw an indicator a couple of days ago. It was called like the fourth dimensional indicator. And it can't do anything more than utilize those 5 parameters, no matter how you slice it. And that's really what it comes down to. And that's why 95% of day traders fail. It's because everybody's trading the same broken system, the foundation of which is just ineffective. So what is necessary is really a shift in your thinking about how indicators work and what is required in order for you to become successful. Now, the first thing that we've done at Rightline is all of our indicators assimilate data from the 2 higher time frames than your trading chart. So if you trade a 5 range, our indicators will assimilate data from the 8 and the 13 range, and they'll project them onto your trading chart. The most important thing is we don't want price on your trading chart to be able to affect any change in the indicator itself. We want the higher time frame price movement to affect that. So one of the indicators that we developed is bias, and our bias indicator projects a background color onto your trading chart. And when the color of the background is pink, it means that the 2 higher time frames, the 8 and 13 range, if you're trading time, if you're using a 2-minute, it's going to look at the 6 and 18 minute. If you're trading ticks, it's going to look at the 2 higher Fibonacci's. Let's say you're trading a 377. It's going to look at I think it's the 510 or the 610, and then the next higher. It's going to jump, and it's going to project that onto your trading chart. So you can see that the background is pink, not because price falls here. Price falls because the background is pink, and because the 2 higher time frames are telling you that price action and market structure, the 15 and 50 are headed to the downside, and also that all support to the downside has been broken. These indicators not only assess market direction, but they all have the ability to assess support and resistance. Now we have 3 colors that represent down and 3 colors that represent up. The pink tells you support's been broken, 15 and 50, that's the 50 period simple moving average, and our proprietary 15-day moving average. They're heading down and the market's in free fall. And you can see that price does fall through this area of pink. Now, so what we do first is we do not look at price on our trading chart. We look at the price of our higher time frames. The second thing we do is we assimilate data from other markets. And what we've developed are called quantitative analysis lines. Now, I'm sure that everybody who day trades knows that certain markets correlate with the direction of the market you're trading, either directly or indirectly. So we look for markets that have a correlation coefficient of 0.7 or greater, i.e. they either move in the same direction or in the opposite direction 70% of the time or greater, that along with the market that you're trading. So here's bonds. Now, each of these lines represents 3 markets. So you have 6 markets that are green. Now, these markets are either markets that move up when bonds move up or down when bonds move up. We know that notes correlate directly. The E-mini S&P correlates indirectly. Most index equities correlate indirectly. And that's what's factored into here. And basically what this really is a footprint of money flow. The bottom line is that I think most people understand that what institutions do throughout the course of the day is that they rotate their money. It's either a risk-on, risk-off situation. When the risk is on, money pours into stocks, and it pours out of the safer markets like precious metals, like bonds, and like notes. And that's really all this is doing. We're looking at quantitative markets that either correlate directly or indirectly, but when it's green, it's telling you that money is coming into bonds, or it's coming into the correlative markets that move in the same direction as bonds, and flowing out of the correlative markets that correlate indirectly with bonds, telling you that bonds are going to rise. And every time you get dual green, price on bonds rises. And the green is not caused by the rise in price. The rise in price occurs because these 2 lines are green. So far, we've done nothing to look at any indicators that assess price movement or volume on our trading chart. We look at other higher time frame markets, or we look at other markets altogether to determine what price is going to do on our trading chart. And then the third indicator that I wanted to show you is our market profile. Now, a market profile is not a market profile. Now, if your market profile only assimilates data from one day, I don't believe that that's enough data to provide you with a good area, with good solid areas of support and resistance, a good value area high, good value area low, and a good point of control. Now, I've seen charts that have a 1 day, a 5 day, a 1 month. I mean, all these different analysis of market profile, and it gets very, very complicated. So what we did was we did a look back and to determine what is the optimal number of days to take a market profile on a look back that allows it to have flexibility in movement, but also provides it with the stability of more than 1 day's worth of data. And that's what this does. It has a proprietary look back time, so it just doesn't assimilate price and volume off of daily price action. And the other factor is that some look at 67% between the value area low and the value area high. You know, they look at the bell-shaped curve. Others use 70%. And there's actually quite a bit of difference in the predictive value of those kinds of market profiles. So ours are really a proprietary distance apart between 70 and 67%. And in addition, it's a dynamic market profile. It changes intra-candle. Very, very few market profiles do that. And the most annoying thing that can happen is we take a trade and at candle close, the value area high jumps right in front of your trade. If that's going to happen with our market profile, it's going to happen intra-candle. So you're not going to get shocked into finding out after you've already executed a trade that market profile has now jumped in front of you. So this is an excellent tool to helping you take trades. And I didn't cherry pick this price. We do not trade into market profile, into the value area high, value area low, or point of control, and we use it as terrific areas of support and resistance with which to take trades. I mean, it is a tremendous additional trading tool. Now, the other is a little bit of market structure, and we are very, very passionate believers in price action and market structure. I mean, we read candlestick patterns and we look for our indicators to confirm what our candlestick patterns show. And one of the most powerful is consolidation. And we have a consolidation indicator that I'm going to show you. And almost always, and you can see it here. It just doesn't project well, but I'll show it to you on our trading chart. A breakout of consolidation almost always occurs in the direction of the trend. So when the 50 is heading down, our proprietary 15 is heading down, price moves sideways and hits resistance. Consolidation is almost always going to break to the downside. And we have a consolidation signal with an audible alert. So this is a signal based on price action. And you will not get a signal if you're more than 4 ticks off of support or resistance. You will not get a signal unless the 50 and the 15 is down. It's sort of a smart signal. And consolidation prints intra-candle, and it's really a very, very powerful entry. And this is just another market structure trade we take. It's a break and a retest of support and the move up. Now, you like to have your quant lines with you, but you can take a market structure trade without of it. I don't want to confuse you because I'm going to show you the platform very shortly. Okay, so let me take the slides off, and we're going to go to the platform, and I'm going to show you the trades we took today on the E-mini S&P. We had 4 trades, and we had 4 winners on the E-mini. So just hang on one second. Let me switch this. Whoops, hold on one second. Hold on one sec. Okay, and actually, let me just go back to the slides here for 1 second. All right, let's look at our trading chart. Now, first of all, I want you to see that we trade with Chart Trader, and we always project our equity results right into the trading room. And we're going to be releasing our trade, our entire trading day soon from today. And you'll be able to see exactly how we traded. Now on the E-mini, I'll show you our trades from today. And let me just, with fractal indicators that assimilate data from multiple time frames, Ninja can be a little bit of a pain. And we have to reload the chart in order to get them to work. Okay. Now here was the first trade that we took. Here's the market open. And here's the first trade we took. It was a move down, a retracement to the point of control. And the most important thing you can see here is all three quant lines are red. We know that money is flowing out of the E-mini S&P and into correlative markets. The candles outlined in pink, I haven't gone into this, but that tells you that order flow and momentum are to the downside, but on your higher time frames. The background color is, it's a tan. I can't remember exactly what color this is called, but this also tells you that you're down on all three time frames. And our first trade went 13 ticks from entry to its furthest point. And we didn't get all 13, but that's how far the trade went. And then we got a lot of chop. And then we got our next trade. And what we wait for is a move up, retracement to support. Again, three green quant lines. Here's powerful background bias telling you that price is aligned to the upside on multiple time frames. Candles outlined in green, order flow and momentum are with you to the upside on your higher time frames. Of key importance, we call them triple quants. All three quant lines are green, now telling you that money is coming into the S&P, and up it went for 1.5 points. Now, while I was busy typing in the 6, we got this trade, and I missed this trade. And this was a really, really big trade. And that's what happens when sometimes you're too busy with bookkeeping. But this was a 4.5 point trade. Again, it's a gimme trade. Pull back to support, order flow and momentum are with you. That's demonstrated by the fact that the candles outlined in blue, and up you go. From entry to the top of the trade before you get a reversal candle, it's 4.5 points. And we have a lot of junk. And then we had another trade. This time we had dual quants, only 2 green, a little riskier, and you can see the trade came back on me. And it came 2 ticks away from stopping me out, but it eventually came up, pushed through, and went up 1.5 points. And then we had a last trade. Right here. Now we don't have any background bias, and this is a little bit riskier, but you can see the candles outlined order flow and momentum. As soon as it ticks in, you go to the triple quants, and it pushed down for 7 ticks, 1 3/4 points, and then we were done. So you can see when you get an alignment of multiple time frames on your trading chart, you get an alignment of order flow and momentum, and that you see when the candle's outlined in yellow or it's outlined in red, and the quant lines align in an appropriate spot for you to take a trade, the predictive value is extremely high that you're going to get a winning trade. Now, if we go through the rest of the day, now we were done, but look at this trade right here. All 3 quants are green, and we're finished here. Market comes up, retraces, quants are green, background bias is our best color, and bam, up you go. Now, these are all independent predictors of getting a successful trade, and that's why they work. We've assessed each one of them individually, and you'll notice nowhere here is there a stochastic, and nowhere here is a single indicator that assimilates data from the time frame that we're trading. We're looking at all higher time frames, or we're looking at other markets. Now, if we keep going, see if there's anything else that occurred for the day. This is a tough trade because you have blue bias on a short trade, so I wouldn't have taken it. You really don't have an entry here. Here you do. You have a break, you have a retest, and a move down right here. Now you have two quants, and that's enough. The top quant is a major quant, and the bottom quant is a major quant. And then you're pretty much done. Now, there was one other thing that I wanted to show you. And that was consolidation. And of course, when I look for it, I'll never find it. But it's a tremendously powerful setup that really gives you terrific trades, and the system signals the trades. All right, let's take the right edge here. And here's, if you see these triangles, you get an audible alert. You can see here's a channel that's traced out by the software intra-candle, not after the fact. You could have taken the short here, would have given you a lot of heat. Better to take it here, but either one would have been a trade out of consolidation and a nice win. And you can see you're trading with triple reds, and the predictive value of that trade succeeding is extremely high when money is pouring out of the E-mini S&P. And we get those consolidation signals all the time. You just have to look for them to occur at the right place. Now, we've gone a little bit further, and that's where I want to go now. And what I'm going to do is take this down for a minute, move it over, and hope you can see the slide. I'm going to assume you can. And just let you know a little bit about our trading, kind of sort of our trading mantra. Now, given the fact that we understand the underlying mathematics of every single indicator, and we've done forward testing on all of them, we do not trade potential tops or bottoms because no indicator can determine a top or a bottom. You saw before that an oscillator can become overbought and stay overbought for an enormously long period of time. We don't trade potential reversals. We don't counter trend trade. And we do not trade potential breakouts. What we trade are retracements in a multi-time frame confirmed trend with multi-time frame market structure in alignment. And I believe that is the only way that you can profitably trade. And we profitably trade. This month, in the entire month of January, I've only had 2 losing days. And out of the last 35 trades, I have had 30 winners. And this is all off a chart trader where everybody can see the performance that we do. Everybody can see our net equity. What we post is our net equity after commissions. And our goal is to make $4,000 a month or $1,000 a week, so that on 4 contracts, you take home $50,000 a year after commissions. That's our goal. And we usually make that goal. Now, here's just a couple of other trades. Again, the move out of consolidation, the retracement, and the move down. But here's what I wanted to show you. These are trades that I actually took in the room. But what we've gone is a little bit further. And what we've done is we have created an algorithm. And the algorithm is responsible for our electronic trades. And this is the first time a platform, I believe anywhere, has combined discretionary trading with algorithmic trading. So that in the middle of my trading, if the algorithmic system kicks in and I'm not on the trade, it will take the trade for me, and it will also trigger the trade on your NinjaTrader or on your platform. So it goes, the signal does not come out from this office. It comes out from Chicago. It's centrally located so that everybody gets the signal at the same time. And the signal is sent out early. As soon as the algorithm senses a potential entry, which is usually right at the start of candle formation, it's going to trigger a trade on your platform. Now, what makes it a little bit different than an auto trader is that we still have to manage the trade. But the algorithmic automatic system makes sure that we don't miss a trade. Now, right now we have it operational on the ES. It's been trading for a week. It's taken 3 trades and it's taken 3 winners. It had a winner today. And it triggered while I was looking at crude. It got us in and it got us a 1.5. Now it got us a win. We can't determine exactly how far the trade's going to go. The positive predictive value of a trade is only how far it's going to go to make you profit. How much profit, is associated with a lot of other variables. But we pretty much let it go via our ATM. Now, what we're going to do with the algorithmic system is that next week it's going to be operational on crude. Now, we trade crude oil as well in the room, and we do it really well. But eventually, we're going to move it to gold. We're going to move it to the Dow, move it to the NASDAQ. We're going to move it to dollar indexes. We're going to move it to bonds. We're going to move it to notes. So the algorithmic system is going to be taking trades on markets I can't watch. Now, we'll have to have those charts off to the side. And when it signals, you're going to get an audible alert, and you're going to see your NTT dome light up. I'm going to show that to you in a second. This was an algorithmic trade that went for 17 ticks. Now on the right edge, the value area low is not an issue. It traded with the 2 major quants, background bias pink, order flow and momentum, characterized by this red halo around the candle. And we got a 17 tick winner. This is a 19 tick algorithmic entry. Perfect entry. Triple quants, order flow and momentum. You can see the candle surrounded in red. Darkest spike or background bias. This triggers an electronic entry, an algorithmic entry on the ES. And we don't do anything. Here's another electronic entry to the upside. 3.75, almost 4 points. Another one, 3.5 points. Now, this is our NTT dome. We give this to you to help you trade. Its patent is pending. I've just called the patent office. They're sitting with the patent right now, trying to figure out what to do with it. To put it together. It provides you with an incredibly powerful method of getting into a trade. The configurations that we've patented are really unique and are never going to be reproducible and cannot be taken by hand. And let me give you an example. On the E-mini, we always take a trade 1 tick below the close of a candle. So if the candle closes, let's just say this is 2002, 1 tick below is 2001.75. We then get the entry on a 1 tick pull-up. We need that 1 tick wick to come up and get us in. So we get a 1 tick premium on the trade. Now, occasionally, we won't get the wick and we'll lose the trade. But the E-mini almost always trades with a wick. and so almost always gets us into the trade. Now, this can occur so quickly, you cannot get this trade by hand. It's got to be electronically triggered, and that's what our NTT Dome does. It gets you into the trade on a pullback. Now, what is the advantage? One, you get a one-tick premium on the trade. Two, it closes your stop from 7 ticks to 6 ticks. And three, there's no slippage on the entry. You don't get any slippage on a pullback entry, whereas even on the E-mini occasionally you can get a tick of slippage on a rapidly moving market. So it really has tremendous advantage to take a pullback entry, and we configure that. And you see right here where it says pullback, we configure that as a 1. And that really does provide you with a nice premium on every single trade. So the electronic algorithmic trades will trigger automatically on your NTD platform, which will be provided to all subscribers, and you do nothing. Discretionary trades will be called out by me as usual in the trading room, and you will enter these trades as usual. And we believe this is the first combination of electronic algorithmic trading and discretionary trading ever created. Now, in the course of the next 90 days, we're going to keep detailed records and see which trading methodology makes more per contract. Except it doesn't really make any difference which makes more per contract as long as both trading methodologies make you money, as long as there are two revenue streams. Now, one may have a slightly more acute curve. I mean, the electronic trading system right now, the algorithmic entry system, is 3 trades and 3 winners. It doesn't take that many trades because everything has to be aligned perfectly. If you want to just trade with the algorithmic system, you might want to increase the number of contracts. You're going to get fewer trades, but your win percentage is going to be higher. But which ultimately leads to more money per contract, we'll see. But I trade very profitably in the room too, so probably your best bet is to take both the discretionary trades and the algorithmic trades. And as we move from market to market, the algorithmic system is going to be clicking in much more rapidly or more commonly on the trading system. Now, there will be truly a cap on the number of subscribers because we cannot put a huge number of people in on one tick. The E-mini can absorb it. Crude can probably absorb it. But as we move to less liquid markets, we have to preserve the integrity of the trade for everyone on the system. So we have some people trading a 50 lot on the E-mini and it handles it fine. But that's not going to be the case if we have an enormous number of people trading, say, the Russell or trading the Dow or trading the NASDAQ. The NASDAQ's pretty liquid, but some of these other markets are not. Gold is not that liquid. It trades about 100,000 contracts a day, sometimes less. So that's why we can't take an unlimited number of people on the algorithmic system. Now, just as part of our philosophy, we never ask you to pay for boot camps. All our seminars and lectures are free. Every time we have a new indicator package, you get free upgrades for life. And they're just all yours as part of becoming a member of our trading family. And that's what we really consider you to be, a member of our trading family. And what we're trying to do is really make you profitable. I mean, for those of you that really want to go on, you can enter our trading school. And I teach you how to be an independent, profitable trader. And we've graduated a ton of students, and they are extremely successful day traders. It's not that tough. You just need the right tools. And this 95% failure rate is mostly because people are trying to take out a screw with a crowbar. They just don't have the right tools, and they're not taught how to trade with the right type of software and the right perspective on what it takes to become profitable. Probably right now, almost all of you are trading with indicators or a system that's assessing price on your trading chart only. Now, if you look at multiple charts, you're doing a better job. But why look at multiple charts when our indicators will assimilate that data for you all on your trading chart? Now, as part of the webinar, we are offering this special. You can lease the system for 2 months and get a third month free. It's $3.99 a month. So for $7.98, you can lease it for 3 months. Now, the lifetime lease for the electronic entry, for the algorithmic entry with the software and the NTD Dome is $39.99. And again, as part of a special, what we're going to do is if in the first 30 days of your lease, you decide you want to own, we'll apply the $798 price and subtract it from the $399. So basically it's $800 off, which drops the price really to $3,100. If you just want to continue on leasing the software, that's fine. It's really up to you, but it gives you the option of a lease to buy type of setup. Now I'm going to look at questions in a minute, but I just want to remind you that we're at www.rightlinetrading.com. You can email us at info@rightlinetrading.com. You can call us at 1-855-765-6681. And just remember, don't trade with a system that doesn't have verifiable results. And be really careful with how you and make sure that the system that you trade with is effective. Now, hang on 1 second. I'm going to answer whatever questions are in the room. Hang on 1 second. Now this is recorded, so don't worry about that. Okay, here we go. I got it. Oh my God. All right. Yeah, Howard says most small businesses will fail within the first 5 years. That's true, Howard. But there's no reason why of all the people who sit down to day trade, half of them can't be successful and half of them can't fail. I don't know why it's not a 50-50 proposition. Remember, we can't take money from the big institutions. They're the ones that create the trend, though. And if we stay with the big money and we follow the footprint of the big money, then it helps us to become profitable. A small business is a different proposition, I think, but I do understand what you're saying. I don't know about that, Christina. I hope not. Yeah, the webinar will be on YouTube. No, I just, I did not mention it. Sherbensky, we started trading stocks, and we just started trading them last week. And I am telling you, it rocks the heck out of stocks. The amazing thing about trading stocks is that we have a 5-to-1 risk to reward. We only post we have to post our profit on stocks. We only have a week, a 1 week track record. But last Thursday, we only traded 3 days a week. I had 6 winners and a loser. The thing about it is that a maximum loss on 1,000 shares of a stock is $80. Maximum reward is $600. You cannot get that trading futures. You can't get a 4 to 5-to-1 risk to reward. You take 2 losers in the futures market, you have a long way to go to make it back. You take 2 losers on stocks, you get 1 winner, you've wiped out the losers, and you're up nice money. So we are going to really clean up with this system trading stocks, and eventually we are going to leverage the algorithmic system on stocks. Right now, it's just on Ninja. Sherbensky, very shortly, we will be moving it to Sierra charts. The triple quant is all 3 lines red or green. The background color is a separate independent variable telling you the direction of the direction of your higher time frames. So they're 2 independent predictors of the success of a trade. If you have them both going for you, the probability of taking a win is very, very high. Okay, Sherbensky, we did list, and I hope you got that. It's going to be recorded. It can be used on any time frame, any market. We trade on an 8 range, but we have a lot of people that swing trade with it, a lot of people that use 4-hour candles on it. It doesn't make any difference. The underlying methodology and the basic principles that drive it work on any time frame and on any market. It works great on the DAX. The only reason I don't trade the Forex is because I have to get up at 2 o'clock in the morning, and I can't do it. But we are eventually going to leverage the Forex on the algorithmic system. So it doesn't make any difference. It works, Dan, it works great on the euro yen, the euro dollar, and we've looked at it on the euro dollar and the euro pound. You sure can, Tamir. Just go to the website and you can sign up for a free trial. Not a problem. You would need about $5,500 in your account. You exit the trade, George, via our ATM. It's listed on our website. Just click on it. We have a different ATM for a 5 range and an 8 range. But we take the trade off in lots, and it's all listed right there. Listen, stocks are, I like them better, but you just need a lot of money, Mohammed. That's all. I mean, you need a minimum $25,000 to open up a day trading stock account. If you got the money, I think it's a more lucrative way to go, quite personally, because of the risk to reward. It's very easy for that 4 to 5 to 1. We help set up everything, Sherbensky, everything. You give us a call, we'll set up. We'll do the soup to nuts for you. The Ninja account, you have to have a license, and they're going to charge you. They're not going to let you use their platform for nothing. Yeah, it's been a volatile market, Mohammed. It really has. It does not work on TradeStation, but we are trying. All right, we put in all the links, and everything is recorded. All you got to do is go to the website, click on performance, and you can see our entire 2015 track record. It's all after profit. In 2015, we made $46,000 and change after commissions. We didn't make our $50,000 goal, but we made $46,000 after commissions. And we do, Dan. We do offer a free trial. No, it's not the Sherbensky. The ES is the only market that we have the algorithmic system on. In the room, we trade the crude oil as well. We will soon have the algorithmic on that as well. We don't, you know what, Christina, we don't really like the auto traders. We're trying to work one out, and we had one simply because the algorithmic system allows us to manage the trade. And let's say that the auto trader, you're not watching it, and it takes a tick of slippage on the entry. So it goes 5 ticks, but you got to take a slippage. So it doesn't make it to the first target. You're not going to know that. And your stop is not going to move to break even. So it's a double it's a lot tougher to trade to auto trade a system than it is to algorithmically trade a system. The algorithmic system gives you awesome entries, and it also gives you the opportunity. Like today, we had an algorithmic entry, and it was approaching an area of upside resistance. So I closed the trade, and it optimized the profit that we could take. If it didn't, we would have been out on a reversal candle, and on a 5 range, a reversal is going to cost us 6 ticks, and that's a lot on the E-mini. So by having the ability to manage an entry after it occurs, we can see if there's slippage, we can see if we have upcoming support or resistance. It really helps make us more money. Dan, on stocks, my 2 staples are Apple and Facebook, and then I'm trying to work in a third stock based on the upgrades, the downgrades, the stocks that have been shellacked, the real market movers for the day. And we have quant lines on stocks that are absolutely unbelievably effective. When you get triple red on a stock or triple green on a stock, the positive predictive value of your entry is very high. And it took us months to develop correlative markets on the stocks. And remember, the correlative markets that we get on the NASDAQ are completely different from the correlative markets that we get on the New York Stock Exchange stocks. So it's really tough. So basically, that's how we select stocks. Facebook is a beast to trade, but I really like it. Well, I'll put the phone number in right now. Yep, Mohammed, you can. Let me just see, Christine, because I don't want to run over too much. What's the difference between the algo entry and an auto entry? Or is the difference trade? Steve, the difference really is trade management. There really is no difference other than that. I mean, an auto trader entry uses an algorithmic, it's an algorithmic setup, but it's got to self-manage, and that's what makes it so tough. You can't self-manage these trades, at least not on these markets. So that's why the algorithmic system is so much more powerful. Christina, there is an audible alert for triple greens or triple reds. I don't use it because I just look for here's what I do. I look at the entry because the first thing you want to do is we're trading market structure price action. If that entry is great, then I look down at the quants. If I've got 2 reds or 2 greens, I'll put the order in and I'll let the trade evolve. Because remember, the color of the quants change intra-candle because they have nothing to do with the direction of price on your trading chart. They're the correlative markets. So sometimes you have to do a little bit of anticipation. But if it's a really good-looking trade, let the trade mature. Keep your trade in, and you'll see that if the market continues to move down, all the quants will roll for you because money's getting pulled out. You can, Tamir. You can start with 1. It doesn't give you great risk to reward, but if you get, out of our last 35 trades, if you get 30 winners and 5 losers on 1 contract, you're still going to make nice money. So listen, everyone, if you have any other questions, give us a call. Let me put our number in one more time. That's nice. Nothing happened. Hold on 1 second. And I'm in the room every day with everyone. For some reason, I can't type it. Hold on a minute here. You don't absolutely have to have Ninja. I mean, you can have your account in in TD Ameritrade, also Interactive Brokers connects. All of those will work, but we'll help you out with that if you're interested. Now there's our number, 855-765-6681. And we will really do everything we can to support you from the tech standpoint. I mean, we're here. So listen, everyone, thank you so much for providing me with this time. We hope you'll road test us, because I'm telling you, you will make money on the system. We do it almost every single day. Not every day, but we rarely have a losing week. We've only had one losing month in 2.5 years. But the numbers we post on the website are absolutely accurate. We subtract $4 a round trip, and that's what we post as our net profit for the day. We take out commissions, and those numbers are real. We would have our traders all over us if we posted a buck too much, and we take that number right off of Chart Trader. You see it evolve as we trade, and you see the entries, you see the targets, you see them taken out one by one. I don't say price hit, target hit. You see that target go out on Chart Trader yourself. It's a very, very, very transparent trade. And the whole thing evolves right in front of you. We hide nothing. And the amount of money we make on the trade goes right up on Chart Trader. All right, everyone, have a great, great afternoon. Again, thank you so much. I really appreciate it. And hopefully you'll try us, because I'm telling you, it's a rough go out there. And if you really want to become a profitable day trader, I believe we can get you there. So have a wonderful evening. And no matter what you do, I really, really wish you all the best of luck. Take care.